You're standing at a checkout. You tap your card, declined. In the next few minutes, I'm going to show you in a simple way how US banks actually detect suspicious activity using the same kind of monitoring systems described by regulators and big banks, and how you can protect yourself. I'm Rosa, a former senior banking manager and a certified fraud examiner. I've worked on trade finance, international banking, risk, compliance, strategy, and implementations, always staying mindful of anti-money laundering while striving to stay ahead of fraud and meet compliance requirements. Everything I'll say is based on two things: my own experience in banking and fraud and public US sources: the Federal Financial Institutions Examination Council, the Bank Secrecy Act, the Anti-Money Laundering, the Financial Industry Regulatory Authority, and others. All the sources of information are in the description. This is general education, not legal or financial advice. Now let's talk about what actually happens the moment you swipe your card or send a payment. Here's how it works in a simple way. Step 1. Data collection. The system pulls in information: dollar amount, merchant, location, time, account history, sometimes device and channel, the automated clearinghouse, card, wire. Step 2. Screening and scoring. The system applies rules and models to that data using your customer profile and historical behavior to assign a risk score to the activity. Step 3. Decision. If the risk score is low, the transaction goes through. If it's high, the system can decline it automatically, send you a text alert, or send it to an investigator for review. Now let's talk about your behavioral profile and anomalies. US anti-money laundering and fraud guidance is clear on this. According to the Federal Financial Institutions Examination Council and other anti-money laundering resources, banks are required to conduct a risk-based approach. If you always use your debit card in Ohio and suddenly there's a card-present transaction in Florida while your phone is still in Ohio, that's a classic anomaly. Real-world case studies for US banks describe exactly this type of geographic anomaly. If your account normally handles a few small checks and automatic clearinghouse payments each month, and suddenly there's a high volume pattern of automatic clearinghouse debits and credits, that pattern is described as a red flag in automatic clearinghouse fraud detection guides. So the system is constantly asking, does today's activity look like this customer's past pattern, and does it look like known risk patterns that regulators talk about? The system only understands patterns, not your personal story. Red flag 1. What would be an activity inconsistent with your profile? If your profile suggests you're a salaried employee with basic expenses, but your account starts moving large wire transfers in and out. Red flag 2. Rapid in and out movement, typical in laundering. Fraud and AML blogs, aimed at US institutions, describe patterns where funds are quickly moved from one account to another. Red flag 3. Cross-border or high-risk payments without a clear purpose. Red flag 4. Third-party control or mule behavior. Regulatory and industry notices warn about accounts where someone other than the named customer appears to control the activity. And then there's human contact. If the bank calls you to verify a card transaction or to ask about unusual activity, that's part of their fraud prevention playbook. How to protect yourself, what you can do to make yourself harder to scam and easier to help if something goes wrong. Step 1. Monitor your accounts and use alerts. If you see something you don't recognize, contact your bank immediately. Step 2. Lock down your access. Step 3. Treat urgent messages as guilty until proven innocent. If someone says they're from your bank and pressures you to act immediately, hang up and call the number on the back of your card. I want to close with a clear boundary. Banks are required under laws like the Bank Secrecy Act to monitor for suspicious activity, maintain customer due diligence, and file reports when necessary. Everything I've shared with you is based on that public framework and my own experience. It's general education, not legal or financial advice for your particular situation. If your account is frozen, if you're a fraud victim, or if you're stuck in a dispute, you need to speak directly with your bank and, if necessary, a qualified attorney or advisor in your state. My goal is simple. If you've already been burned by systems that feel rigged, I want you to at least understand the rules that are being applied to you. If you want videos on fraud, risk, and how power works around your money, subscribe and hit the bell.